Today we're going to be talking about the importance of the equities open hour within the 12 candle window. Stay tuned, traders. We'll be right back. G'day traders, Stacey Burke from Stacey Burke Trading. Middle of the week, we've had some big moves already on the British pound crosses. There's lots of movement happening in gold. There's been lots of movement happening in some of the US dollar pairs as well. Lots of volatility in the markets. Today we're going to be talking about the 12 candle window and the importance of the high and the low of the day, but also mainly the equity opening hour. How that hour will often be where a peak formation will form for either the high of the day or the low of the day in one of the three sessions, or based on how that opening hour of the equities markets trades will often give us information if it's in the middle of a move or if a peak formation is potentially about to form or has formed already. So just to review, we've talked about structure in the past. We've talked about bigger geometrical ranges, you know, whether that's a rectangle up high for a move back down or a rectangle on the bottom. Monday, Tuesday, Wednesday, Friday, Monday, Tuesday, that initial balance can give us a bigger geometrical structure for measured moves. But each day, the high and the low of the day, the high of Asia, the low of Asia will often give us some information for an ascending triangle as we head into the London Open, or a descending triangle. But most importantly, as each session unfolds, we talk about Asia, London, and New York. That middle hour between 9 and 10 p.m., 3 and 4 a.m., and 9 and 10 a.m., New York Eastern Standard Time, I use the 15-minute charts. In a large majority of cases, during Asia, we will either form a high of the day or a low of the day as we head into that Europe-London Open. What's important about that is, as we've talked about previously, not counter-trending the peak formation that is currently in place. So if a market has a high of the day already in place as we head into the next 12 candle window with the Europe-London Open, we don't want to counter trend that current peak formation. So if the market was to give us a type 1, type 2, or a type 3 type setup heading into the Europe-London Open in that first hour, that may often continue the move. If it was trending, or if that market was in a range-bound market, we would still want to be trading off the high and the low. All of my trading setups happen at the low of the day or the high of the day. So if Asia puts a high of the day in place, as we head into the next 12 candle window, I'm expecting potentially that London, Europe-London, may put in a low of the day. Now, we've talked about the types of price action. I want to see an engulfment or a pin hammer. Now, if you understand what that means, when these show up, you understand that when there's an engulfment that takes place, that's what gives us our high of the day, and that's what potentially will give us our low of the day. That's where the market has shifted and closed above a previous bear candle or below a previous bull candle. That's where we get our high bull and our low bear to lock in our high of the day or our low of the day. Now, as we head into the next 12 candle window, London may give us a new low of the day with an engulfment pattern, but it may not be. It may be a stop hunt back into the high of the day. We may go 1, 2, 3 back up into the high of the day, but we now have a high of the day and we have a low of the day. And based on how the market trades, either up into the high or down into the low, we will now look for that market to either continue in New York or reverse off the high or the low, because the market will be working into the high of the day for a reversal, or it will be working down into the low of the day for a reversal back either to the London trader who's sold that off, or back to the high of the day, and potentially even for a measured move if that buy low scenario is back with the underlying trend of the market in that direction. Now we'll look at some examples from this week on the major pairs, but what I want to focus on today is the importance of that middle hour. That middle 12 candle window is where I will often look for my buy low hammer or my sell high hammer after there's been an engulfment, or if the market has done an extended 25 to 50 pip stop hunt against the trend or into the high of the day or into the trend for a continuation back through the low or the high of the day. That tail, especially if the market's been working down in 3 pushes and there's a level where that market at the specific timing in this window as the equity markets open, if this is the low of the day, I'm looking for that market now to be trading back in the other direction. Same scenario if this was the high of the day and the market has already given us a peak formation that we've traded back into. And we've talked about the only time I usually look for a trade in that first hour is a 1, 2, 3 on the third push to the high or to the low for a 33, at which point we will most likely see the left side at the high or the low of the day for the reversal or the stop hunt back either against the trend or again back with the existing underlying trend that's in place. So we can often get a 25 to 50 pip move that sets up perfectly, but it may be a stop hunt into the underlying trend. But moves that are with the overall existing trend will tend to be the measured moves that will go 50 or 100 and sometimes more pips in that direction. But the key today is to pay attention very specifically to that middle hour when the equity markets open, especially if you are at the high or the low of the day. Now, there are some variations to that, but it's critical to understand that unless we see an engulfment prior to that scenario, most likely that market could still be in the midst of either setting up for the trade or be in the middle, especially if Asia is the high and London sets up and it doesn't give us a specific peak formation setup in that equities hour. That market may be either squeezing in for an explosive move off the low or the high of London, or it may be in the middle of a move and continue into New York, either up or down, for the move in the New York session. So hopefully that makes sense. We're going to look at some specific examples. Very specifically in that middle hour, I see a lot of trade setups that are just in that 1 hour time frame when the equity markets open. Now again, thank you for a lot of great questions, a lot of great feedback, but I'm just for myself, I want to emphasize how many of the great trades come when the equity markets open, and specifically at the low and at the high of the day. Keep it simple, keep getting better, traders. Just to reinforce, that 12 candle window for me eliminates out a lot of guesswork, a lot of screen time. It allows me to focus on 1 or 2 really high priority setups that have asymmetrical risk reward, a 1 bar stop, and sometimes more than 4 or 5, and in great opportunities if you're in a measured move in a strongly trending market, maybe 10 times return on your risk. Keep the great questions coming. Keep it simple. Thanks for hitting the like button. If you haven't done so, go to my homepage, get my 7-step daily routine for high performance traders. Keep getting better, build a winning mindset and the discipline to master the markets. Have a great trading session, and may the markets go with you.
Good day, traders. Stacey Burke from Stacey Burke Trading, continuing our discussion on the 12 candle window and focusing on the importance of the equity market opening hour, which is our middle hour of the 12 candle window. I pay very specific attention to that hour when I am at the high or the low of the day. And as we head into each session, we can form a thesis or a bias based on if a peak formation is already in place. For example, if Asia has already put a peak formation in place for the day, up high or down low, and we're currently in the middle of that move, then that gives me some information that I can head into the next session with as we head into the next 12 candle window. But I look for very specific types of patterns when we get to that middle hour. Now, if we look at the British pound from this week, we have a market that we're already into the 12 candle window. The market had, this is an example of a 33 trade where the market had 3 pushes down and then had an open drive candle heading into the Asian session. And our middle hour, which I've highlighted just the equity hours for this particular example on this video. But we have an example where the market was already in trend, and we talk about not counter-trending a peak formation. So in this case, the market had given us a peak formation low in the rollover from Friday night into the Monday morning. And then we had 3 pushes, and then on the third push was the open of the 12 candle window. We had an open drive, a breakout candle of the previous day's high as well. The market is in an uptrend. We get a bullpen hammer at the open of the Equities Asian hour. And this is the exact type of scenario that I look for in terms of candle patterns. Now, this is what I would consider to be in the middle of a move. Now, I don't know that, but because we've gotten this bullpen hammer in a strongly trending market, we can only trade in that direction anyways. But more importantly, just the candle pattern. In this particular example, we are at the high of the day, but this is not the candle pattern. This is what I would look for at the low of a day, but in the middle of a move after a peak formation, I would continue with this trade. And we'll look at another example of this week on the pound New Zealand. The market continues to move strongly, and again, the importance of 25 to 50 pips. So the Asian session opens, and market continues up another 25 pips. We have a low of the day in place, and we have a low of the Asian hour, the Asian equity market hour. And once the engulfment occurs after the 12 candle window at the high of the day, we now have a high of the day, and you'll notice it's a 1, 2, 3 with a pin hammer up top, which again is an example of a short entry. The high bull candle has been engulfed on a 1, 2, 3. Now, this is not in our equities hour, but just looking at the candle pattern off of round numbers with an engulfment. And then the second bear candle down also engulfs the second bull candle. But just focusing on our equity hour window, this market now has given us a peak formation high. We have a peak formation low. The market auctions down 25 pips, goes sideways into our Europe open. The market engulfs that to continue the move down. Then our equity hour opens. And what's important about the equity hour is that in that hour between 3 a.m., 4 a.m. New York Eastern Standard Time, the market has given us the London high and the London low. When we get this bullpen hammer on the bottom at the low of the Equities Asian session, for me, that is a buy signal. Now, I may wait sometimes for this to come back inside of the London hour, but in this particular case, because we had 1 push, 2 pushes, 3 pushes down, and we got the bullpen hammer at the low of the day, that to me is a buy signal. Buying low after the equities session open. I'm expecting the London session now. Asia's given us a high of the day. They've locked it in. They've also given us an outside structure in the Europe window. Okay, this push up with the pin and this engulfment is what traps traders into the low of the day. This hour, though, is important because when this market reverses and engulfs in that London hour, we now have a low of the day. And the thesis is that this market is done doing business down at the low of the day. We're in an up-moving market from Friday. They've come back into the trend, 25 to 50 pips, almost 50 from top to bottom. It is 50 from top to bottom. Pin hammer and an engulfment, and then sideways price action to continue that move into the US 12 candle window. Now, if we have a trending market, we can expect that, as we talked about in that 717, the hour prior to the 12 candle window, or in the 12 candle window first hour, we will often see a stop hunt trap. And this market goes down 1, 2 sideways for the engulfment. So instead of a 1, 2, 3, it goes 1, 2, 3 sideways. Engulfment, pin hammer in the hour of the equities market open to continue our trend back in the original direction from the low of the day trade in London. So Asia gave us a high. London locked in a low of the day, took out the high of Asia, stop hunted back into the trend before going sideways with an engulfment and a pin hammer to continue for a 50 pip move, 50 pips above the equities open before pulling back and going into consolidation. So what I'm looking for in this equities hour is for the session to give us a high of the day or a low of the day in our 12 candle window, but more specifically in that middle hour when the equity markets open. We have a high of the day in place in our first 12 candle window. The market goes up 1, 2, 3 in the equity hours open and gives us a bullpen hammer after hitting the previous day's high, an engulfment. So we have higher lows, we have a low of the day, we have a low of the US session close, which is a big rectangle. We talked about structure, big rectangle. And then 1, 2, 3 into the equities opening hour, second candle of the hour, engulfment sideways. And then a small, some traders go, what about the engulfment going long? That's called counter trending the peak formation. So the equities hour gives us a peak formation high. Traders chase this move long, get caught up high, chasing the move, counter trending the peak formation before we get our bear pin hammer beside the engulfment for the 25 to 50 pip move through the low of the day. The market then goes into consolidation. We have a new low of the day because of the pullback. The market goes down there again. Now this is outside of our window. I'm talking specifically about the equities hour. The market hits the high of the day again and goes 1, push 2, push 3, push London equities hour. Tweezers for the 25 pip move stop hunt to the low of the day, evidenced by the pins on the bottom of that candle in the equities hour. 1, 2, 3, 4 inside bar, and then a bullpen hammer at the low of the day. So, not looking at hindsight, we're looking at how price behaves specifically at the high and low of the day in the equities opening hour, engulfments and pin hammers at the high or low of the day. The market retest. This is a great example of fighting for a better price. The market closed on a pin hammer. If traders didn't trade the break of the inside bar, they can fight for a better fill. Maybe the numbers, including the spread. Now, they say, well, we don't know, but you might take a part. I sometimes will take a partial here and a partial in here to get an average price that's a better fill. If I feel like the market is potentially going to take off too fast, but I very rarely, if ever, see a gap ever not get filled. The market goes back through where? The high of London. So now London has locked in a low of the day, but this is what's important. Once it clears this level, all this volume underneath, we talked about trap volume before, just like we saw over the previous day. Once they shift the market through that trap volume, they don't want to go back down there because it allows all these losing traders or traders that are sitting on negative equity, possibly if they're holding on to a loser, to get out of a losing trade. The market does not want to let them out of a losing trade. The market, again, we're focused on the 12 candle window and most specifically that equities hour because that first hour will often be a stop hunt trap. We saw the 717, the hour prior to the 12 candle window, stop hunt to the high of the day. So hit the stops. The first hour of the equity, the 12 candle window, stops back 1, 2, 3 engulfments with a pin on the first candle for the continuation in the US session for a 50 pip move. not only through the high of the swing high, but also the high of the day before going into consolidation. And as we head into today's session, we have a high of the day in place. With our evidence by our pin hammers, we have a low of the day in place. And right now we wait as the Europe-London window opens. We'll just tidy this up. Sorry. Can't get it to move. Oh, there we go. Okay, so as we put this at the high of the day, the market is still inside. We wait for the market to work one side, breakout, pullback, whatever it may be. And then obviously looking for our London equities hour to either breakout, pullback, continue a move with a bullpen hammer, possibly engulfment bullpen hammer, or to come back through the low of the day and give us a low of the day. Right now we're inside of the high and the low, going sideways. But most importantly, that middle hour can give us a huge amount of information about buying low and selling high, engulfments and pin hammers. Have a great trading session, traders. Keep it simple. That middle hour, especially if you're at the high of the day or you're at the low of the day, is where I look for my best setups with the best risk reward. Have a great trading session, and may the markets
Hi
go
traders,
with you.
it's Stacey Burke from Stacey Burke Trading. If you haven't done so, please head over to my website at staceyburketrading.com. I create updates on almost a daily basis, and I would love for you to receive them. Just click on the blog. If you want to enter your name and your email address, I'll send you my free audio program, the 7-Step Daily Routine for High-Performance Traders. This is essential knowledge for all traders in all markets, and this is for helping traders to master the market with discipline, confidence, and a winning mindset. I appreciate all your feedback and comments. As always, traders, stay disciplined, and may the markets go with you.